This is Barry Zalma, speaking for Claim School Incorporated with another true crime story of insurance fraud. This one, number 37, is called Disaster Scum. It is a true story with all the names and places changed to protect the guilty from my experience of over 54 years in the insurance business. Disasters bring out the best in people. Disasters also bring out the worst in people. Some risk their lives and fortunes to help victims, others risk prison to profit from the disaster. After the January 17, 1994 Northridge earthquake, insurance companies sent teams of experienced claims handlers and billions of dollars to Los Angeles County, California, to ease the effect of the earthquake on those of their customers prudent enough to buy earthquake insurance. Money was paid out quickly. Because of the extent of the disaster, few controls were in place. Those who prey on the hardship of others descended on Southern California as the plague of frogs descended upon Egypt when the Pharaoh refused to heed Moses' warning. Abel Carpenter saw the earthquake as an opportunity to make an illegal fortune without effort. Abel had worked for 2 months before the earthquake as a laborer on a construction project. He went door to door in Northridge, California, convincing the residents whose homes were damaged by the earthquake that he would protect them from their evil insurers and repair their damaged homes quickly and efficiently. Understanding that there is always a little larceny in every person and that earthquake insurance has a very large deductible, he got the homeowners to sign up with him. He offered each homeowner a profit on their insurance claim. Even after paying his fee, their house would be improved and better than it was before the earthquake. He promised them lanais, hot tubs, extra bedrooms, and cash. He seemed to each of the homeowners to be too good to be true. They would survive the earthquake and make a profit. Abel had no concern that he was neither a licensed contractor, public adjuster, nor an attorney. He relied on the greed of his customers and the natural distrust of insurers. Abel had no concern for the needs of the people who put their trust in him. His only concern was money. He wanted to be rich. Regardless of the extent of damage to the dwelling of his customer, the estimate Abel prepared would be the same. The structure would need to be totally rebuilt at a cost of $375 a square foot. He would submit contracts to the homeowner, prepared on forms he bought at a local stationery store. He wrote on each contract a fictitious license number, knowing that the customer would never call the contractor state license board to check. He negotiated with each insurance company adjuster. His fee was only 40% of the amount received. He promised each insured that he, as a general contractor, would build their home into a new earthquake-safe structure if they turned over to him the remaining 60%. Even Abel was surprised at the gullibility of his customers and the speed with which the insurers settled the claims. Within a month of the earthquake, he had over 50 contracts signed by homeowners from Northridge to Van Nuys and from Sherman Oaks to Westlake. His estimates were never less than $500,000. Within 3 months of the earthquake, Abel collected almost $10 million in fees and $25 million in construction contracts. He had no interest in actually rebuilding the homes. He had explained to the customers who relied on him that he would start work as soon as materials were available. He called them every day. Abel explained that the earthquake had destroyed much of his ability to obtain construction materials. He comforted them with promises of quick work once the materials arrived. Abel had no concern that each of his customers, whose homes were not as damaged as he reported, were subject to prosecution for fraud. His only concern was money. When the collections reached 10 million, Abel deposited the money in a bank account on Grand Turk Island in the Bahamas, bought an airplane ticket, and retired to a villa he purchased on the island. The remainder of the 10 million he invested in mutual funds. Abel Carpenter now lives comfortably on the dividends. His customers still have broken homes and insufficient funds to complete their repairs. The homeowners and the insurers were defrauded. Good faith claims handling hurt everyone but Abel. Neither the homeowners nor the insurers had learned that when a deal sounds too good to be true, it is. This video was adapted from one of the stories in my book, Insurance Fraud Costs Everyone, which is available as both a Kindle book and a paperback from Amazon.com. Thank you for your attention.